the Chiba Bank Limited. Hello everyone, welcome back to the channel. Today we're going to talk about one of Japan's most prominent regional banks, the Chiba Bank Ltd. We'll cover its history, stock listing, current performance, key events, challenges, and what the future might look like. So, let's get started. First of all, here are some quick facts about the company. The Chiba Bank Limited was founded in 1943. Its headquarters is located in Chiba Prefecture, Japan. It offers retail banking, corporate banking, trust services, and other financial solutions. The bank operates not only in Chiba and Tokyo, but also has offices in Osaka, New York, London, and Hong Kong. It is the largest regional bank in Chiba Prefecture and a well-known name across Japan. On the Tokyo Stock Exchange, it is listed under the ticker code 8331, and it is also a component of the Nikkei 225 index. Now, let's delve into some more details. The Chiba Bank was established in 1943 and has since grown to become one of Japan's leading banks. It provides a wide range of financial services, including banking, trust, and investment services. The bank has a strong presence in Chiba Prefecture, where it is the largest bank by market share. However, it also has a nationwide presence in Japan and overseas. In terms of its stock listing, the Chiba Bank has been publicly traded on the Tokyo Stock Exchange since the 1970s. Currently, it is listed on the Prime Market, which is the highest tier of the exchange. The stock code is 8331, being included in the Nikkei 225 highlights. The bank's importance within Japan's economy. At the time of recording, the current share price of the Chiba Bank is around 1,508 JPY. In the past 24 hours, the stock has increased by about 0.27%. Over the past year, however, the stock has seen strong growth, gaining approximately 33%. In terms of the bank's current situation, some noteworthy points include its recent decision to acquire a 19.9% stake in Chiba Kojo Bank as part of its expansion efforts. Additionally, several board members resigned in May 2025, which may lead to management restructuring. The successful completion of a share buyback program is also a positive signal for shareholders. Looking ahead, forecasts suggest that earnings per share will grow by around 10.8% per year. However, revenue is expected to decline by about 3.9% annually. This indicates that while the bank is poised for improving profits, it faces pressure on overall sales. Before we move on, please take a moment to subscribe to the channel. Now let's discuss some of the gains and losses associated with investing in the Chiba Bank. Among its strengths are its strong dominance in Chiba Prefecture, where it has built a loyal customer base over the years. The bank's expansion strategy, such as the acquisition of Chiba Kojo Bank, is another strength. Its shared buyback programs demonstrate management as confidence in the company's financial health and commitment to returning value to shareholders. The positive earnings growth forecast also makes it attractive to investors seeking growth opportunities. Finally, the bank's extensive network, including its overseas offices, gives it a competitive edge in the market. On the other hand, among its weaknesses is the revenue decline forecast of nearly 4% annually. This may raise concerns about the bank's ability to sustain its operations and profitability in the long term. Another risk is the intense competition in Japan's banking sector. The bank's net interest margin may be squeezed due to fluctuations in interest rates. Additionally, an economic slowdown or a rise in loan defaults could impact the bank's bottom line and jeopardize its recovery. Furthermore, changes in regulations and government policies may introduce new challenges and uncertainties for the bank. Next, let's look at some of the key events related to the Chiba Bank. In March 2025, the bank announced the purchase of a 19.9% stake in Chiba Kojo Bank for approximately 165 billion yen. This move is part of the bank's strategy to expand its regional banking network and offer a wider range of financial services to customers. In May 2025, several board members of the Chiba Bank resigned, including its president and CEO. just weeks before the bank was scheduled to release its earnings report for the fiscal year ended in March. The resignations came amid a series of scandals and controversies that have shaken the bank's reputation. In the previous year, the bank faced scrutiny over its lending practices, when it was found to have provided loans to a bankrupt cryptocurrency exchange, causing significant financial losses to customers. The bank had also been accused of mishandling customer funds and failing to comply with anti-money laundering regulations. These scandals led to calls for greater accountability and transparency in the bank's operations. The resignations of the board members were seen as a way for the bank to distance itself from the scandals and to bring in new leadership that could restore public confidence in the institution. During the period between 2024 and 2025, the bank executed a share buyback program, returning a portion of its profits to shareholders. The buyback program was part of the bank's efforts to boost shareholder value and reward investors for their continued support. The bank had repurchased a total of 100 billion yen worth of its own shares through the program. Finally, let's look at the future outlook for the Chiba Bank. Earnings are expected to grow strongly, but revenue may struggle due to lower margins and competition. Despite these challenges, analysts remain positive on the stock, with many maintaining buy ratings. They point to the bank's strong capital base, improving asset quality, and long-term stability as reasons for optimism. However, external risks, such as shifts in interest rates and broader economic headwinds, must be watched closely. Further acquisitions and expansion efforts may provide opportunities for growth, but success in these endeavors is not guaranteed. To sum it up, the Chiba Bank, Limited, is a well-established regional bank with strong roots in Chiba and beyond. It shows solid earnings potential, expansion strategies, and investor-friendly policies like share buybacks. At the same time, challenges remain: revenue slowdown, competition, and macroeconomic risks. For long-term investors, Chiba Bank looks stable, but short-term fluctuations are always possible. What do you think about the Chiba Bank? Is it a stock worth holding for the future? Let me know in the comments, and don't forget to like and subscribe for more financial insights. And thank you so much for watching. See you soon.